Right now, the silver market is one of the most volatile and closely watched markets in the global financial system. As we go live with this update, silver in the US market is trading around the mid-$80 range per ounce, with COMEX futures moving between roughly $83 and $85 during today's session. This means the market is already very close to the psychological resistance level that traders around the world are watching, $90 per ounce. The big question on everyone's mind is simple. Will silver break $90 today, or is the market preparing for another temporary pullback before the next major rally? To understand what is happening in the silver market today, we need to look at the latest price action, the macroeconomic forces driving demand, and the key technical levels that traders are watching. Silver prices climbed toward about $85 per ounce in recent trading, gaining roughly 2% in a single session and continuing a strong long-term uptrend. Over the past month alone, the metal has gained more than 9% and has risen over 160%, compared with the same time last year. These numbers highlight just how powerful the silver bull market has been. What makes the current situation particularly interesting is that the silver market is no longer driven by only one factor. Instead, it is being influenced by a combination of geopolitical risk, currency movements, investor demand, and structural supply shortages. When multiple forces align like this, the result is often explosive price movement. One of the biggest catalysts pushing silver higher right now is geopolitical uncertainty. Rising tensions in the Middle East have triggered strong demand for safe haven assets like precious metals. When investors become worried about global stability, they often move capital into assets that historically preserve value. Silver and gold have played this role for centuries. In recent days, escalating conflict in the region has increased market anxiety, leading to a surge in buying across global silver markets. But geopolitics alone does not explain the full story. The silver market is also experiencing a structural supply deficit. According to industry forecasts, global silver demand is expected to exceed supply again in 2026, marking the sixth consecutive year of deficit in the market. Analysts estimate that the shortfall could reach roughly 67 million ounces this year. In simple terms, the world is using more silver than mines are producing. When this imbalance persists for several years, it creates powerful upward pressure on prices. Investment demand is also increasing rapidly. Physical investment demand, including coins, bars, and institutional purchases, is projected to rise around 20% this year, reaching approximately 227 million ounces. This is a significant shift because it shows that investors are not only trading silver on paper markets, but are also buying the physical metal itself. Historically, strong physical demand has often preceded major bull markets in precious metals. Another important factor driving the silver prices today is the relationship between the US dollar and commodities. Silver, like most globally traded commodities, is priced in US dollars. When the dollar weakens, silver often becomes cheaper for international buyers, which can increase demand and push prices higher. Recently, fluctuations in the dollar have contributed to increased volatility in the metals market. Now let's focus on the technical picture, because this is where the $90 question becomes extremely important. In the short term, silver is trading in a consolidation range between roughly $83 and $90. This range has become the battleground between bullish momentum and profit-taking by traders. The current day's trading range shows prices moving between about $83.48 and $85.73, indicating strong but cautious buying activity. If silver successfully breaks above the $90 level, it would represent a major technical breakout. In financial markets, psychological round numbers often act as resistance zones because many traders place sell orders near those levels. When price finally breaks through, it can trigger a wave of momentum buying, short covering, and algorithmic trading signals. That combination can accelerate price movements quickly. In fact, earlier this year, the silver market demonstrated exactly how fast it can move. During the early months of 2026, silver briefly surged to levels above $120 per ounce before experiencing a sharp correction as traders locked in profits. That dramatic swing shows both the potential upside and the volatility that comes with trading silver in the current environment. This volatility is one of the reasons why the silver market attracts so much attention from traders and investors. Unlike gold, which often moves more gradually, silver tends to make larger percentage moves in shorter periods of time. This is partly because the market is smaller and partly because silver has both industrial and monetary demand. On the industrial side, silver is an essential material for modern technology. It is widely used in solar panels, electronics, electric vehicles, and advanced semiconductors. As the global economy transitions toward renewable energy and digital infrastructure, demand for silver in these industries continues to grow. Some analysts even argue that silver has become a strategic resource for the energy transition and future technology development. When industrial demand grows at the same time as investment demand, the impact on price can be dramatic. That is exactly what we are seeing today. Governments and corporations are using more silver for technology, while investors are buying it as a hedge against economic uncertainty. Another topic that has gained attention recently is the structure of the COMEX silver market. COMEX futures contracts represent the largest trading venue for silver in the world. Each contract represents 5,000 troy ounces of silver, and thousands of these contracts trade every day. Because futures trading allows leverage, relatively small amounts of capital can influence large positions in the market. This leverage amplifies price movements. When bullish momentum builds, leveraged positions can drive prices rapidly higher. But the opposite is also true. If traders begin closing positions or taking profits, the market can drop quickly. This is one reason why silver occasionally experiences sharp corrections even during strong bull markets. Looking at the bigger picture, many analysts believe the silver market is undergoing a long-term structural shift. Historically, silver was often viewed as a secondary precious metal compared with gold. But in recent years, that perception has begun to change. Increasing industrial use, supply constraints, and rising investor interest have transformed silver into a strategic commodity that sits at the intersection of finance and technology. The question now is whether this shift will push prices significantly higher in the coming months. If the current bullish trend continues, the first major target remains the $90 level. A clear breakout above that resistance could open the door to a move toward $100. Once prices enter triple-digit territory, the market could attract even more global attention, potentially creating a new wave of investment demand. However, traders should also be aware of the risks. Silver has already experienced extraordinary gains over the past year, and markets rarely move in a straight line. Periods of consolidation or temporary pullbacks are normal, especially after large rallies. Profit-taking, rising interest rates, or sudden strength in the US dollar could trigger short-term corrections. For example, earlier in the year, the silver market experienced one of its sharpest one-day drops after hitting record highs. Traders rushed to lock in profits following the massive rally, causing prices to fall rapidly before stabilizing again. Events like this highlight how quickly sentiment can shift in the precious metals market. So what should traders watch next? The most important level remains the $90 resistance zone. If silver approaches that level again and buying volume increases, the probability of a breakout rises significantly. On the other hand, if the market repeatedly fails to break through $90, it could remain in a consolidation phase for several weeks. Support levels are also critical. Right now, the $83 to $84 area is acting as short-term support. If prices fall below that level, the next major support zone could appear near $80. As long as silver remains above these support levels, the overall bullish structure remains intact. Another factor to watch is investor sentiment. During strong bull markets, sentiment often shifts from cautious optimism to widespread enthusiasm. When that transition occurs, the final stages of a rally can become extremely powerful, but also increasingly volatile. Some analysts even believe that if supply deficits persist and geopolitical uncertainty continues, silver could eventually move far beyond $100 per ounce. While such predictions are difficult to confirm, they reflect the growing recognition that the silver market is entering a new phase. For long-term investors, the key question is whether the current rally represents the beginning of a multi-year bull market or simply a temporary surge driven by short-term events. The answer likely lies somewhere in between. Structural factors like supply deficits and industrial demand suggest that silver could remain strong over the long term, but short-term volatility will likely continue. As we monitor the market today, traders around the world are watching the charts closely. Every movement toward the $90 level increases anticipation.